Sameer Narayan joining in the studio right now. Sameer, hi, good morning. Good to have you as always. What are the headlines indicating? While, the Nifty continues to hold out, you've got budget, markets are waiting for the 100-day agenda from the government. But are the internals looking all right? Or do you think liquidity is still the biggest concern that's going to continue to plague us?
I think, as you rightly said, liquidity is at the margin improving because now the RBI stance is also altered. And having said that, it is also a question of how much demand does one see to take up that liquidity. Businesses have to be confident about them seeing that kind of sales or revenues happening in the near future for them to take up the credit. So I think somewhere the visibility aspect is what is not getting adequately seen to the business sponsors, because they would probably look at doing a capex or taking on further loans or debt only when they see there is some amount of buoyancy. Now today, at a time whereby your the monsoon probably could be a big driver, I think in the near term, the budget in terms of the policy statement and the monsoon in terms of the sentiment or to what it does in terms of the demand, I think that's what could be the real two things to watch out for.
Since you've touched upon the macros, Sameer, let's talk about that a little bit more. We've got the latest on the GDP data as well coming out, IIP, CPI figures, monsoon you mentioned, and hopefully we'll see something steady so inflation won't be a risk on that front. With sort of all the pieces in place and maybe possibly another rate cut coming, do you see that as perhaps something the market will start to factor in as a positive, or is it still waiting for some other cues?
I think in terms of the rate cut, probably as the central bank has always been mentioning that they are bothered about the transmission aspect. Now there is actually a headwind there, because today if you look at the combined fiscal deficit of both the state and the center, it is almost close to 6.5%. Now that is actually a ceiling which gives you very little room for you to probably do a 50 or 75 or 100. Now unless it gets transmitted, you will not see the cost of funding for an average business going down. So I think there we clearly have a challenge.
Okay, so a big challenge coming in on that front. We've been talking about really then where do markets go from here? We seem to be this indecisive phase, struggling to understand which direction to really move in. Given some of the context that you've just described as well, do you still have conviction in perhaps going out there, looking at perhaps some of those higher beta names with the sense that things will improve going forward?
I think one has to dissect it in two ways. The way it works is that there is one section of the market where growth is probably more than adequately priced in. So now one needs to drill down as to those sectors where perhaps the room for disappointment is less because you're not actually paying for it. So let's say utilities, oil marketing company or capital goods. I mean, these are sectors where perhaps the expectations are low. Now since expectations are low, there is probably a chance that there would be some positive earnings beat, and that could then give you a room for valuations to trend up. Because today we've seen for the last 3 years, you start with expected earnings growth at 25-24%, and then as the year goes by, you continuously keep scaling it down. So I think what has actually led to is perhaps only multiple expansion, and now we need to really see the earnings kick in, because if you remove the corporate banks apart, there is very little in terms of the profit pool for us to start valuing in terms of a sustainable earnings stream.
But how soon do you see the profit pool expanding to utilities, to cap goods, etc.?
Now see, timing is something that I don't think anybody is good at, but I think the way the Prime Minister has outlined in terms of his priority, probably what the market and us market participants need to probably figure out is that he needs to be looking at when he's saying that ease of living. Now I think that has a lot of connotations for maybe the urban infra, the whole sanitation aspect, and probably these are places where up till now private sector could invest only in a limited way. So chances are that in case in the budget you see some real policy making initiatives whereby private sector is allowed entry into these sectors. I think that could probably unleash the animal spirits.
I'm just going through the stocks which are at a 52-week high, and again what amazes me is that it's not that everything is bombed out. Everything is not bombed out. Titan is at a 52-week high. Iron Exchange is at a 52-week high. Maharashtra Scooters, we were talking about that story yesterday, that how it's becoming more like a holding company, and that holding company has got a lot of investments in Bajaj group of companies. It started as a scooter company, but it is now a holding company which owns businesses and stakes in various Bajaj group of companies. So whereas I'm not excited about the mid-cap space, there is definitely an element of a little bit of differentiation. 2006, 15, 16, 17, 98% or 90% of the mid-cap market went higher. Right now, 90% of the mid-cap market is flat and only 10% of the mid-cap market is moving higher. Let me put it this way. Sameer, DMart, Page, Bosch, Shree Cement, these were like the go-to stocks. Every fund manager in the town was blindfolded with the valuation and with the return on equity some of these companies gave. And those who bought these stocks, they made money. Are these stocks, after a 15-20% correction, giving a good entry point?
I think no company is in a perpetual growth mode. You have companies which are in growth phases. So I think the first leg of, let's say, above trend growth is already captured, delivered and priced. So I think unless and until you see the visibility improving on the next growth leg, which may not be a 20% CAGR over the next 3 years, but even if it comes to say a 15%, then probably
where the stock may not be exactly cheap.
Absolutely.
But
absolutely.
no, what will you buy? If I have to propose a template, buy a company which has a little bit of moat around it. It has got good promise in terms of return ratios. It may not be the cheapest stock in the town, but it can still be a 15 to 20% earnings compounder. What would you buy?
I think one should look at oil marketing companies very clearly, because today you could have a...
So you'll buy OMCs for next 3 years?
Absolutely.
And you buy them today?
Absolutely.
Will you buy them after the show?
Maybe he's already bought it.
Have you already bought them?
Well, of course, I mean, these are the value stocks that one should look at today.
So disclosure there. Okay,
yes.
We were chatting about Avenue Supermart. Let's take it across to Pankaj and get in more details on the analyst meet. Pankaj?
So, when we just talk about Avenue Supermart, Aisha, a lot of brokerages gone ahead and attended that entire analyst meet. It's an annual event which happens, and the management was quite clear that there has been competition which has come in, and that's one of the key reasons what they are evaluating. But at the same time, they continue to be conservative. They continue to invest very cautiously. Last year, the number of store openings were not that high, but that doesn't change their move. In terms of e-commerce, they are not going very, very fast compared to what others are doing. They continue to be positive as far as growth is concerned. They have not given any particular guidance regarding store opening, regarding what can happen in terms of numbers, but they continue to outbeat the industry. They continue to invest very conservatively, and that's the strategy they have been following. But within this strategy now, there has been some competition. That's what the management said.
Yeah, that's pretty much in line with what Neville Noronha had actually indicated to us in his interview about 2 months back. But let's move on. Let's take it across to Karunya, find out what did CEAT have to say in their analyst meet. Karunya?
Well, as far as the commentary is concerned, it's definitely, giving mixed sort of signals at this point of time. They were talking about their capex plans, which is to the tune of 3,300 crore rupees over the next, over 3 years, which is panned out from FY18 to FY21 onwards. It is high due to bunching up of their growth capex. They said that they're confident of utilizing new capacity with the reasonable ROE. They see adverse product mix over 12 to 18 months. They're ramping up their TBR, which is truck and bus radials. They're ramping up their PCR passenger car radials as well. But the focus will now shift more towards OEMs. Do remember that right now 55% of their revenues come in from the replacement market. Going forward, they want to change that pie and they want to focus more on the OEM space, and they want to bring up the share of OEMs from 45% and grow it another 4 to 5% going forward. So that is something that's a bit concerning to analysts as well, because margins definitely are likely to see more pressure with the management's increased focus on OEM, because they did also reiterate the fact that OEM space is, in fact, the entire auto industry is witnessing a slowdown, and there's no visibility as to when exactly is it likely to pick up at this point in time. They expect efficiency and scale benefits to limit margin and ROE impact. Demand outlook, like I said, remains hazy even as replacement market has flattened. Weakness, they said, will persist for some time, but no timelines given by the management at all. Some recovery is likely in the second second half, driven by pre-buying right ahead of the BS6 transition. That's all they could offer. Second half likely to be definitely better. But going forward, post FY20, what is it that one can expect? That's still, to be figured out.
Thanks for that, Karanya. Okay, here are some of the other stocks that we're going to be tracking today. DHFL may now look at halving its stake and share control. Remember, we have seen certain news around the counter with payback of NCDs, and now, of course, some more on the stake sale. We've also got NSE set to exclude Jet from the F&O space from the 28th of June. It's been looking like the end of the road for Jet, although a few, discussions still on with the Hinduja. Tata Motors may global sales have dropped over 20%, so no real silver lining coming in at all from the auto majors. UBS downgrades IndusInd Bank to sell, talking about credit risk, so that's coming in this morning on IndusInd. And finally, DMart posted its, analyst meet talking about how store expansion will be a key strategy going forward. And in the Economic Times today, hot off the press, let's take a look at some of those headlines. L&T all set to take control of Mindtree. That's according to AM Nayak. They're fairly confident now that they will have majority and a go-ahead on that deal. CPBIB is looking to invest $150 million in delivery. So that's the big deal in the tech space this morning. We also are looking at the fallout of that ban on Deloitte. Audit firms may limit their clients to MNCs. They're thinking of keeping off those risky audits on the back of that regulatory heat.
Okay, that's fresh off the press, but let's tell you what's also lined up in the mid-cap radar this morning. Let's get in some fresh mid-cap ideas from our chartist. Kunal, what's on your plate?
It's a buy on KEC International. We discussed the stock even yesterday as well. I think the stock is poised for yet another round of upside. We've seen the stock rallying, consolidating, coming back to its key moving averages in terms of mean reversion. And now I think the rally could be set in once again for the stock price. So looking at the chart patterns on the near term, I would suggest a buy with 334 as a revised target from what I gave yesterday, and stop loss could be trailed hard to 314.
Right. Jay, what about your mid-cap ideas?
Well, after TCS and United Spirits, another buy recommendation which I have today is on Motherson Sumi. See, this stock since a couple of months, I would say, has been trending lower only and has been forming those low tops and low bottom, and it was sliding in a clear downward sloping parallel channel. But then, what development has happened in last few trading sessions is that the stock has reversed from the lower end of the channel with a clear breakout from an ending diagonal pattern, which clearly indicates that the short-term bottom is formed in this stock, and the upside bounce, or I would say a short covering, is quite possible from here on. So one can buy this for a target of 130 with a stop loss of 118.
Okay, and Manas, what about your mid-cap ideas?
Aisha, I would like to go with McDowell's, because here the trend is positive now, because stock has started making higher tops and higher bottoms on the daily charts, and yesterday it broke its 200-day moving average. So I believe that this rally will continue and the stock can come in the range of 595 to 600. So take a long position here. Stop loss should be around 564.
Okay, so those are some strategies that to equip you with as we head into trade. But let's also take a look at some of the other news around the globe this morning.
Okay, that's some global news for you in pictures, but let's take a look at what is it that we're staring at when it comes to trade. today, and we've been talking about some of the individual stocks which are going to be in focus. Diwan Housing, they may be halving their stake. The share control may actually be given to the new party, and it seems that the PE firm, that's Oak Tree, is something that they are in talks with currently. So it seems that due diligence is currently on to undertake, or rather taking over, part of DHFL's wholesale loan portfolio, which is valued anywhere between about 10 to about 12,000 crore rupees. And it seems that Kapil Vadhavan could actually give up the MD's post as well if this deal were to materialize. Again, this is something what the newspapers are reporting this morning. This is purely unconfirmed news and speculative in nature, albeit. But Sameer, just a word on a Yes Bank, Diwan Housing, Indiabulls Housing Finance. We all know what the core issue is. The market environment not really coming to their rescue. But do you sense that these are those high risk, high reward propositions where maybe the brave could take exposure?
I think it is, as you rightly said, the brave is not so much about brain and return rather than about bravado. So if you're here for making money, then you need to be sure as to what is the business you're buying, what is the value that you're getting, and is there a thesis for it to then scale up. I think with these businesses that you just outlined, A, there is a regulatory challenge, B, there is a business challenge, and C, all said and done, the whole auditors now wanting to take a step back. So one really wonders the kind of numbers that we've been, being dished out, is it for real? So there's a big disbelief factor that one has to right now surmount. So unless and until one does that, how can I start putting numbers in place and then putting a value to it? Firstly, I need to get a fix on what is for real.
Okay.
So it's a crisis of confidence today, that unless and until I'm sure that this is what it is. See, either somebody comes and tells you this is the extent of the hole, this is what I will fill over this period of time. So now that is past. Unless and until somebody comes and gives a full disclosure, then it's very difficult for investors to then it's only a price call. Then you're basically playing price that, oh, because it has fallen from 100 to 20, so it could probably have a mean reversion. I think.
But in hope that, at some point, someday, someone sensible will buy it over. I don't know. I guess that is what people who are invested in it must be thinking.
So, as you said, that Diwan Housing is right now, DHFL is now talking to buyers. So, I'm sure they would be now culling out that barring all these problematic issues, if I remove that, then on a earnings basis, what is the sustainable business that I'm getting? I think
How do you value the core?
Absolutely. Yeah. Because this whole growth of the last couple of years has perhaps had a lot of other positive momentum, which perhaps one need not have done otherwise in case one was in a steady state situation.
We've got Chakri Lokapriya also with us, so let's bring him into the conversation. Chakri, you're talking about a crisis of confidence this morning. What's your view, given that markets also seem to be tottering between which way to head currently, and they've been in this sort of phase even post those election results?
Now that we are about only 3 weeks away from the budget, and it's a much anticipated budget, the first one after the new government has come to power, I think the market will kind of, be up one day, down one day, kind of trying to second guess what's going to be announced in the budget. So from that perspective, I think it's going to be more a trading market between now and 5th of July.
Market, Kunal, let's get a sense from you. Would you have would you have a direction just in terms of the next 2-3 weeks? Would you advise caution? You were talking this morning about going a bit low beta. What would you advise?
So I think that's what a trader has to adjust to the market trend. So at a time when you are very clear on the direction, when you have sectors participating wholeheartedly, both in terms of the high risk appetite and the low risk or the low beta or the conservative sectors like the IT, pharma, etc., then you probably build in a case that you are going more on your exposure. So even if you have, you can probably look at 1x or maybe 1.5x in terms of exposure. But when you're not sure of the market trends, I think it's more important to lower your beta and lower your exposure, let the markets consolidate, give you that indication of which way the breakout is likely to happen. Until the time you don't see those signals, I think it's prudent enough to play a bit low in terms of your exposure and leverage.
Okay, let's bring you the latest on Cyclone Vayu as well. It's changed course. It's set to miss the Gujarat coastline. Authorities are bracing, in fact, for strong winds, heavy rainfall. Disha Shah from Mirana is joining us with all the latest updates there. Disha?
Well, that's right. As per the latest update from the Met Department, we are reading that it says that the cyclone Vayu will not make landfall at Porbandar or any other coast of Gujarat. It is moving parallel to the sea coast, which will cause strong winds and rains, but the possibility of landfall is over. We know for the fact that IMD had predicted until today morning that at about 3 p.m. today, landfall is expected in the state of Gujarat, especially in the Verawal region, but now that possibility is over. It changed its course overnight and it is now further moving into the sea instead of moving towards the land. But of course the Gujarat government is on high alert, at least for the next 48 hours or so. There are about 2.80 lakh people evacuated in almost 2,000 shelter homes. 500 villages have been affected and people from the low-lying coastal areas have been moved to safer locations. In fact, a place called Diu, which is a major tourist destination in the state of Gujarat, at least 10,000 people have been moved as well. So the Gujarat government, although landfall possibility is over, but there are chances of heavy rain causing damage. That is what the SkyMet prediction is at this point in time. And over the next 48 hours, they are on high alert with more than 50 NDRF teams on the spot. There are about 300 commandos and even the other army forces as well on the ground. At least 13th and 14th of June were the crucial days for the state of Gujarat. The schools have been asked to remain shut. Train services have been affected. At least 50 train services have been cancelled so far. 4 flights have been cancelled. So all of these are the ground situations and precaution measures taken by the Gujarat government.
That's the live update coming in on Cyclone Vayu, but here are some of the other national stories that are doing the rounds.
Alright, those were some of the national news stories which certainly will keep us engaged the whole through day. I think some clarifications are coming from Reliance Capital on why PwC resigned. Reliance Capital is communicating that the PwC observations are completely baseless and PwC acted prematurely without even statutory discussion with the audit committee. Sameer, first it was rating agencies and now it is the audit committee. Is this a storm in the teacup? Or this is something which will have serious implications, because if auditors don't sign the balance sheet, then there is either an indication that auditors are being extra careful, or there is a genuine problem with some of these balance sheets where what looks like a problem right now is just tip of the iceberg. Because in the last 7 days, first it was Deloitte, then it was PwC. I hear other auditors also are under the scanner right now. It is
the ILFS IFIN.
Is it like saying that auditors have closed their eyes to the reality of some of the corporate balance sheets? And that's bad news. That's very bad news. That's terrible news.
Well, a good way to look at it is that now things are changing, because if one understands if this is what was happening for the last 5 years, so today why are they sitting and waking up and then asking questions? So at least now you can be sure that you are now coming close to the turn.
But the change will come with pain.
Absolutely.
And the pain, I think, is going to be felt before the change happens.
Absolutely.
So
not a doubt.
I think our market is prepared for this pain.
Well, frankly, in certain pockets, I don't think so at all, because the way they are pricing it is still that maybe the growth expectations of 25% book growth has now come down to 10-15. But one would really need to wonder what exactly is the composition of the book.
Okay. 2.5 minutes to go, and some of the stocks which we've been discussing at length. One has to be Yes Bank. There's a huge UBS downgrade which has come in. Sameer, I want to revisit Yes Bank. What is the hope for this stock?
Well, we were just discussing when Aisha asked. I think the problem today is I don't know what is the extent of the damage. So unless somebody says, and now even the auditors are pulling back. So the challenge is that someone has to come and say, okay, I have seen it, this is the way it is, and this is what is the extent of damage, and this is how it's going to be done. So today somebody needs to have a redressal plan in place. Unless that is there in place, how can the investors, will rely on the data that is being dished out?
Okay. Chakri, where are you going against the mob? Best gains are made when you buy something where either somebody is selling or no one is buying. Give me your last big acquisition or last big purchase where you are happy to keep that idea as 5 to 8% or even 10% of your total capital allocation.
I don't know about contrary, but in general, you've seen some kind of downgrades in the cement sector and also monsoon concerns, etc. But that's as a sector we have probably about 8% sitting because of whether all the various government initiatives, infrastructure, etc. And all these cement companies, they haven't really seen any pricing growth. It's only volume growth, and that has been tepid. So against this backdrop, I think even if you see some kind of price increase, despite some of these warnings which keep coming from government circles talking about cartels and collusions, we don't think they stand merit because it's hardly about less than the price of inflation, the price. So cement is one sector we're looking at.
Okay, go. And then we'll get the first rates. It's Thursday morning, and frankly, from a market narrative, it's the pain I think which the mid-cap space has started feeling again. It's the pain I think which is very, very visible, at least in the market, so to speak. So in moments from now we'll get the first pre-open rates, and if global cues are anything to go by, well, crude is below $60. Crude below $60, the macros are not looking all that bad. Sameer, the macros are not looking all that bad. Crude, oil, bond yields. That is the fact of life. Then you got the global macros, which are looking terrible and pathetic.
Absolutely.
What is the trade-off? Which should one pay greater importance to? The global poor macros, fear of a slowdown, contraction in bond yield, or the local macros where there is oil, currency and bond yields all on the same side?
I think somewhere there India has a problem on the global macro, because if I go back 14 years, our percentage exports to GDP has remained flat, which for a country of our size is honestly a matter of concern. And then if you drill it down further, the large employment generating sectors, be it the leather, textiles, agri, I think all of them have just not taken off. So quite honestly, these are things that we need to fix. And in India, what we've seen is the product markets have actually seen quite a lot of reform, but it is the factor market that now needs to be put in place for then people to come and take a bet on investment. So
the management is clarifying that you cannot take a complaint from a shareholder who's got 4 shares seriously. The stock is down what, 10% in 2 days?
Yeah, but the fact is it has retraced also. If you look at the 2 weeks prior to that, it also retraced quite a bit. So see, these kind of volatile moves, one probably needs to look at it over a longish period of time. Now,
move in India bulls, risk or volatility? Risk or volatility, I'll say it again, very important for our viewers to understand. You understand this, but is the current price action in India bulls telling you a risk is coming, or this is a volatility which investors should use to buy?
I think volatility comes only when risk is around the corner.
So you're saying the move is risky?
Absolutely.
You will not buy the stock?
Definitely
not.
They got
30,000 crores of cash in the balance sheet.
Sorry.
What will you buy then? Where there is perceived volatility, but you don't think that is risk?
See, I think there is enough value in, say, the lenders who are today looking at assets that are available to pick and choose. The NBFCs that flooded the market over the last half a decade. Now today you're saying the PSU banks are now coming back. The assets are available, they are locking in good yields, and the challenge for them is that today with the LD ratio at almost tallying off, they also need some amount of good credit borrowers for them to start going in for loan growth. So I think today you are not pricing in the delta in most of the PSU banks, but those PSU banks, for example SBI, I think the results were very encouraging. So today if one were to look at, it's the largest lender in the country, so one needs to see where you are not pricing in the expected change. Where the rate of change is already been priced, there the room for disappointment can be huge, and that's where volatility happens.
Okay, Sameer, great to have you on the show. Thank you so much for taking the time out.